Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Citic Telecom International Holdings Limited Annual Report. Citic Telecom International Holdings Limited offers a diverse range of businesses and services that cater to various needs of customers worldwide. At the core of its operations are international telecommunications services, which include voice, messaging, data, and value-added services for mobile, fixed-line, virtual network, internet, and over-the-top operators. The company also provides specialized services such as private networks, EPL Ethernet private line, SD-WAN, software-defined wide area network, and cloud computing to multinational and business enterprises. Additionally, it offers information security, cloud data center, enterprise mobile, voice and information, and value-added services to meet the evolving needs of its clients. Furthermore, Citic Telecom International Holdings Limited provides internet-based communication services, which enable seamless connectivity and collaboration across geographical boundaries. The company also engages in property and equipment holding services, rounding out its comprehensive suite of offerings. With a strong presence in Hong Kong, China, Macau, Singapore, and internationally, Citic Telecom International Holdings Limited is well-positioned to serve the global market with its extensive range of businesses and services. The stock price of Citic Telecom International Holdings Limited has experienced a modest increase in the past year, but it falls short of the reported 26.34% surge mentioned earlier. According to various financial data sources, the company's stock price has risen by between 6.05% and 9.17% over the last 12 months. Investing.com reported two different figures, with one entry stating a 7.32% change and another noting a 9.17% increase. TradingView indicated a 6.05% rise in stock price, while the Financial Times showed a plus 7.41% change. TipRanks.com also reported a year-to-date price performance of 6.07% as of March 2, 2026. Despite these positive movements, there is no single news event or factor that can be pinpointed as the cause for Citic Telecom's stock price increase in the past year. The company's performance has been steady but not spectacular, with no major catalysts driving its growth. Citic Telecom International Holdings Limited market capitalization of $10 billion is materially smaller than most of its industry peers of roughly $39 billion. Citic Telecom International Holdings Limited trades at a lower price-to-earnings ratio of 11 times and a higher price-to-book ratio of 0.91 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable, and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Citic Telecom International Holdings Limited itself. The company maintains a moderate leverage profile, with liabilities making up 38% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 7.17%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, breakthroughs in cutting-edge innovations such as AI and next-generation information technology have intensified competition, leading to increased revenue. The expansion into emerging sectors like cross-border data services and computing services has also contributed significantly to revenue growth. Additionally, investment in high-value strategic sectors, such as platform services and information security, has paid off, resulting in substantial increases in revenue. Furthermore, the global expansion of Chinese enterprises' products and operations has led to a significant increase in revenue from international telecommunications services and mobile services. The development of cross-border data business and overseas software agency business have also contributed to revenue growth. In terms of specific numbers, there was a $57 million increase in revenue within 1 year, with Hong Kong revenue increasing by 4.6% and others revenue increasing by 24.2%. On the decline side, the complex economic environment and increased competition have led to a decrease in revenue by 0.1%. The decline is also attributed to decreases in Internet services, enterprise solutions, and fixed-line services. Specifically, Chinese mainland revenue decreased by 15.7%, Singapore revenue decreased by 22.2%, and revenue from telecommunications services decreased by 1.2%. These declines are largely due to drops in Macau projects and leased lines revenue, as well as a decrease in voice services. Based on the provided information, it is clear that the company is indeed generating positive operating cash flow. This is a significant indicator of financial health and stability for any business. Positive operating cash flow means that the company's revenues are sufficient to cover its expenses, allowing it to generate excess funds that can be used to invest in growth opportunities or pay off debts. This achievement is a testament to the company's efficient management and effective operations. It suggests that the company has been able to manage its costs effectively, optimize its resources, and maintain a strong cash position. As a result, investors and stakeholders can have confidence in the company's ability to sustain its financial performance over time. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the data shows a substantial decrease. Non-current bank and other borrowings dropped from $3,561 million in 2024 to $1,206 million in 2025, representing a reduction of over 66%. This trend is consistent across different reports, with total debt decreasing by 16.6% from HK$3,907 million to HK$3,257 million. The decrease in interest expenses has been equally notable. Interest expenses have dropped significantly from $252 million to $152 million, indicating a substantial reduction of over 40%. Furthermore, the effective interest rate for fixed-rate borrowings decreased from 5.8% to 3.3%, contributing to this decline. Overall, these changes suggest that the company has successfully managed its debt and reduced its financial burden. The company has a history of paying dividends to its shareholders. This is evident from the references provided in the summary, which point to specific pages where this information can be found. On the other hand, the company has not engaged in share buybacks, as indicated by the absence of any reference to such activity in the same sections. In conclusion, the company's financial strategy appears to prioritize dividend payments over share repurchases. This approach suggests a focus on returning value to shareholders through regular distributions, rather than reducing the number of outstanding shares. That concludes the financial summary for Citic Telecom International Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.